So, the housing market frenzy that we found ourselves a part of over the past couple of years is over. But what exactly does that mean for a potential buyer or seller? And what does the rest of the year have in store for us? Hi, this is Andrew with the S2 real estate team in Frisco, Texas. And we all know that the market has been absolutely crazy over the past couple of years. And if you've happened to see any of the videos I've been doing over the past few weeks, couple of months, you'll know that I've been saying there's very early signs of a shift. There's very early signs of a shift. I mean, I've been trying to repeat it over and over, but it's here. It's now here. So, I can officially say that the frenzy's over and the shift is in front of us, and it's actually unfolding right before our eyes. And how big of a shift we see really depends on where you live. It's going to play out different in different areas of the country. But what exactly does that mean for you if you're planning on buying or selling a home? Should you wait? Should you continue to rent? Did you miss the boat if you're a seller and you are hoping to sell at the highest price? So, in today's video, I'm just going to break down a few of the areas on what the experts are saying we should all be looking for as we go through the rest of 2022. So, first and foremost, with the frenzy being over and the shift being in front of us, what does that mean, right? What do we need to look out for? And the number one thing is that we're going to start to see that the number of homes for sale, the available inventory, grows. And that's a good thing. It's a good thing all the way around. The frenzy that we've been in is just not sustainable. It's not really fun for anybody. People would say, well, as an agent, you must love it, right? Well, actually, we don't. Right? It's not fun working with a buyer and seeing their hopes and dreams of, getting crushed time and time again. Or even from the seller perspective, should we accept this offer? If we accept this offer, is there another better one going to come in an hour or tomorrow? And it just creates a lot of anxiety for all parties. So what we're going to start to see is inventory grow, the number of homes for sale grow. Now, to be clear, we are not expected to get back to pre-pandemic levels of inventory, but we are going to see the highest levels of inventory we've seen in a while. As a matter of fact, over the past 2 weeks, we've already seen the number of homes for sale surpass the number that we had a year ago. And that will bring more inventory into the market. So what does that mean for you as a buyer? Well, it means you're going to have more options. It means that even though supply is still low, you're not going to be able to go and bid $20,000, $30,000 under a list price. I'm not talking that, but it does mean that you're not going to be competing against 20, 30 other buyers. There may only be 2 or 3 offers on a property, again, depending on where you are. Those prices are going to be much closer to list price than what we've seen in the past. Everything will just start to settle down. So that's welcome news for a buyer, as it's going to, allow you to step out of that pressure cooker that you've been living in. Now, for a seller, it doesn't mean that, or what it does mean is that you're going to have to be a little bit more careful on your list price. We're seeing price reductions increase in the market right now. Now, price reductions are a normal part of every market. Do not think for a minute that that's a sign that the market is going down, crashing in any way, shape, or form. It's not. And there's no indication that it's going to. I know some people are sitting out there waiting for it. And again, there's just no sign that that is there. It's not appearing in the numbers of the leading indicators at all. If it does, I'll tell you. I'll be sure to let you know. But it does mean for a seller that you're going to have to price closer to the market value. Those price reductions that you're seeing in the market are sellers that price too aggressively to begin with the idea that the market was going to catch them up, and it's not. So those are the price reductions that you're seeing. As always, in any market, the homes that are in the best shape, that show the best, are the ones that are going to sell first. All right, number 2, mortgage rates. Right, as we all know, inflation is been a problem. Right, running at 40-year highs, and the only way for the Federal Reserve to combat inflation is to raise mortgage rates. Now, although the 30-year mortgage rate isn't directly tied to the federal funds rate, it's more closely tied to the 10-year Treasury bond. There are impacts that are felt across the board. Now, what is going on right now is there has been talk in the last couple of days that the Fed may not be quite as aggressive in their raising of interest rates going forward due to the fact that it appears as though we might be over the hump with regards to inflation growing. There's signs that it's pulling back just a little bit. However, the ongoing inflation pressure is likely to push mortgage rates a little bit higher, right? They did settle down a little bit last week. They actually dropped into the high fours again in some cases, but that's going to fluctuate. Overall, though, the trend is that you're probably going to see rates continue to increase for the balance of this year. Again, they're not forecasting it to be drastic, but they are forecasting rates to continue to push up. Now, as a buyer, that means you're going to have to check with your lender because the cost of buying is going up. Your purchasing power is going down. And if you had a pre-approval done back in January, February, March, those numbers may not be good anymore, right? So you're going to want to get back with your mortgage professional to have those checked and make sure that everything still looks good and you're comfortable with where all of those numbers are coming out. Now, as a seller, mortgage rates in some cases are going to have homeowners jump into the market to move up sooner rather than later, right? The idea behind that is, you've gained a lot of equity over the past few years. And now, you've got, depending on where your current mortgage rate is, if you're going to be moving up into another house, you may want to capitalize on cashing out some of that equity, right? Unlocking in a rate before they go higher in making the move. Again, only you can decide when the best time, to put your home on the market is. But again, as rates move, you've got to look at it all encompassing. It's not just one piece of the puzzle. Now, with that in mind, home prices, the last major item here. I know there's a lot of people out there that have been waiting, that they've got an idea that home prices are going to come tumbling down. Personally, I just don't see it. There's nothing again, as I said earlier, there's nothing in the leading indicators that are leading me or many of the experts to believe that. Right now, we're seeing things split. There are definitely some markets in the country that are more likely to be overvalued than others. What happens in those markets, that's where the experts are split. Some feel that prices are going to just flatten out. They're going to be level. They're not going to continue to go up. Others say prices in those markets may decline. But the decline that they're talking about right now is right around 5%. Right? So that's not a massive drop. And in many other markets, including here in North Texas, Frisco and Prosper, prices are forecast to continue moving north. The amount of inbound migration that we have in this area means that there's still quite an imbalance in supply and demand, which is pushing prices higher, even as more inventory comes on the market. But I don't think that we're going to be seeing that 20-25% a year appreciation that we have been. You're going to see that drop. Every single week when I see a new pricing model for here in North Texas, it varies. I've seen some people predicting prices increasing 5% in the next year. I've seen others still as high as 11. I've seen others forecasting another 15 to 18% price appreciation all the way through 2027. Now, I will say that's cumulative and not per year. But bottom line on this is everything is just starting to settle down, right? I mean, again, it's felt like a pressure cooker. That's the part that's going away. Now, what are you going to do? Well, only you know. Only you know what the best decision for you and your family is. But one of the absolute best ways to help make that decision is to stay informed in what's going on in the local market. And there's two ways that you can do that. One is you can subscribe to this channel. I update these videos each and every week or more frequently if there's information that I feel I need to bring to you. So you can do that. And I'll always share what the latest information I receive is to get that to you so that you can make the decision for you. And the other way is to sign up for my weekly market reports. These go out every single Wednesday, and they're a great indicator on what's happening in the local market. Every home for sale in the country is tracked, and you can look at any city or zip code in the nation. I've got the link for the Frisco market report below. If you go and take a look at that, you can put in any zip code or city that you like there. And it's easy to track. You'll actually see that every market is showing small signs of cooling, even right here. And we've been red hot for months and months. So again, hopefully that helps. If you have any other questions whatsoever, please don't hesitate to reach out. You can always give us a call at 469-296-5230, or feel free to email us at contact@s2realestateteam.com.